right, guys, here we go again with another of our Evolution Consulting market updates as they've come to be known. And you may, if you watched the market update video prior to this one, you'll notice I'm wearing the same stuff because it is, in fact, the same day. This one is being recorded on the 6th of September, 2016, about 5:30, and we just did a market update video, or recorded a market update video on our 120-day trading review. This market update, however, deals with the fact that metals just absolutely started just tear-assing higher today. All right, and for those of you that were watching, I mean, we're talking about gold up $26, $27, $28. All right, I mean, you know, a big move to the upside as we forecasted, and we said that. And for those of you that subscribe to Switch and Signal, all right, the narrative is going to sound vaguely familiar. It's just you got to be patient with these trades, okay? Especially when you're dealing with something as geopolitically significant and as geoeconomically and socioeconomically and geopolitically connected as the spot valuations of metals as the world transitions to a completely new financial order, okay? You got to be patient sometimes with those trades. All right, now for those of you that were smart enough and actually listened and purchased JNUG as it moved lower and purchased NUGT as it moved lower, and you purchased USLV and SLVP and GDXJ and a few of the other ones, you know, as you purchased them and you lowered your cost average, there's one of our customers in particular. I'm giving him the thumbs up because he's doing it right, did exactly what we told him to. So, you know, just keep buying them, you know, as that starts to dip. As JNUG starts to dip, as NUGT starts to dip, as you load up, because once it gets going, it's going to be big, and we saw that today. Now, this is prior, mind you, to the ECB meeting. All right, so we had a significant upside day today in metals. It was reflected. I mean, we're talking about 3 days in a row. It was 10%, 10%, and 13% on JNUG. That's a 33% in 3 days upside move. So if you were buying it and you were lowering your cost average, you're probably feeling like a friggin' genius now. Okay, and it's something that we forecasted. We said, as if you watched our previous market update videos, we said as the SGE starts to bring that unified system between the city of London and Shanghai and Hong Kong, that all starts to come online, guys. Resistance is futile. Okay, as a matter of fact, I'm going to coin a new phrase today. I call it the Tiananmen Square price action effect. Okay, and that's really what we're starting to see on a lot of these ETFs and certainly the underlying spot valuations of metals. Is you can stand in front of the tank, but don't act surprised when you become pavement grout. Okay, and that's what happens. The more the Fed and the COMEX try to repress metals, guys, they're running the risk of making what they're doing very obvious. And if that becomes mainstream, they're dead. Okay, so the Occam's razor, they've been skating between metals repression and a strong dollar and markets at current levels, okay? Running out of running room. All right, so at the end of the day, we're going to start seeing those spot prices move higher as we forecasted. I mean, we were accurate almost to the day. All right, I mean, you know what? I mean, 2 weeks ago we said be patient, wait, and, you know, we saw the information, and it was just that glaringly obvious manipulation. Another week ago we said just be patient, wait, keep buying into the dip, and it was a glaringly obvious repression. And today, just like the SGE had enough and hit the fuck you button is really what it comes down to. It just went gish, and you saw what happened. I mean, and what they're doing is they're hiding those metals boosts, okay? The SGE desk boost, they're the COL, that unified trading desk, they're hiding those boosts in regular upside catalyst days, which is interesting because when we were talking about, I mean, I haven't looked at the exact number recently, but I'm going to, in the interest of completeness. I mean, we're talking about, holy hell, 1351. I'm going to take a quick look here. Real quick. So with 13, I mean, we're holding the 1351 level. We're back above $20 on silver, which I thought was pretty cool. That was like a stealth rally, man. Silver, like I just happened to look down today and went, oh, that's nice. You know, so we're back up above $20 on silver, guys. That is setting up before the ECB meeting. So if you don't think that is major institutions and major banks and major players that are buying in before the ECB meeting, what do they know that most people don't? Okay, you're out of your mind. So the fact of the matter is, all we need now, as we forecasted, and we said the next run is going to be, you know, up past the 1400 level and then probably settle back down, you know, 1410, 1415, that range. And just like we said in a couple of market update videos ago, it's, you know, soon enough we'll be going, holy crap. Remember when metal, you know, gold was trading at like 1300? It'll, you know, we'll be in the mid 14s, the high 14s. That's that next level up we've been talking about, guys. All right, and you can see just how desperately obvious they've been trying to stop those metals rallies, and it's game over now. It's time's up, pal. You know, and what we're seeing now is that rubber band effect, and we've talked about it before. Certainly those that read the Grant Street Notes Metals Investing Guide, you'll understand what we mean by the rubber band effect. That is, if you repress any commodity that should be valued higher based upon a mutually agreed upon value, when that, you know, when the rubber band lets loose, the momentum is going to carry it through prices where it may normally have been, and certainly up and beyond and past. So that's what we're seeing. All right, so point of the story, though, guys, this is looking like the rally that should have happened like a week or two ago, but was thwarted, if you will, by the Fed and the COMEX. And here comes. I'm going to just say it the way it is, okay? And as you know, as you watch these market updates, you'll know that I am now adhering to post-Watershed Act BBC language, okay? But the deal is the Fed and the COMEX, okay, really is the only entity left that can even sort of interrupt the flow of metals every once in a while, okay? And here's what's going to happen. They are going to get fucking crushed. You think that the Federal Reserve is going to go up against the City of London, okay, which is where all the real economic decisions are made. Wall Street's kind of dog and pony show, okay? But if you think the Federal Reserve and the COMEX are going to go up against the City of London and the Shanghai Gold Exchange and win, it ain't going to happen, okay? The City of London was smart enough to jump ship. The City of London was smart enough to get on board with Team BRICS, okay? And you can kind of see what's happening also in the Middle East with the OPEC meetings. That's the, and I've often said this, that's the F the petrodollar meetings. I mean, the Middle East's had enough of that crap. They'd rather not have to deal with, the U.S. dollar vis-a-vis the petrodollar, whatever. So we're starting to see a lot of the stuff that we forecasted, guys, even during our test of concept phase. For those of you that listened, okay, a lot of that stuff that we've spoken about is starting to happen. And credit where it's due. V, the guerrilla economist, I'm going to give him a thumbs up and a salute, okay? He was very vocal in the whole F the petrodollar, and that's going to be one of the catalysts. And he's right. You know that? Like I said, credit where it's due. All right. So that being said, guys, as we see these metal spot prices move higher, I mean, that's 3 days in a row. This continues, especially into the ECB meeting, and we get the ECB doing one of their buybacks and stimulus, and we're buying back ETFs and equities and bonds and securities and treasuries and everything that's fucking not nailed down, okay? That's going to send the price of metals even higher. And what does that prove? That proves something that we've spoken about, which is the Bank of Japan went berserko, okay, with first the printing, then the ETF buyback. Now it's the ECB's turn, and who's up next? The U.S. Federal Reserve. What are they going to do? They can't raise rates. Remember what we said? I called it one print. They all have to print, otherwise the whole Ponzi scheme comes crashing down. Guess what, guys? It's true. Okay? And at the end of the day, I don't know how to put this any other way. Maybe December for a rate hike, maybe, and I said this by a different Fed chairperson, because there is absolutely zero confidence in Yellen now, and there's zero confidence in really her entire administration, other than the fact that, I mean, I can tell you right now, and this is from friends of mine, this is from contacts that I have in addition to Evolution 4.0 research, big banks and hedge funds, they've had it with her. They're done with her, okay? One thing that big banks and hedge funds, and you can jump up and down and say bankster this or whatever the case may be, and I really don't give a rat's ass about that, okay? But they like stability. It's difficult to invest in an environment where there is no stability, okay? And with having to do the are they or aren't they every other month with the raising of the rates and shit like that, they're done with that. They're done. They don't like that. If you're going to raise rates, do it, okay? And do it in a clear and concise manner. But, I mean, you want to talk about Yale, and I mean, just absolutely face planting. There you go. All right, so I mean, you're going to talk about the ECB is going to start buying back, tons of securities. You got the BOJ that's just gone, berserko printing. And at the end of the day, guys, all right, that leaves the Fed in a position where they can't raise rates. They can't. What's left of the Anglo-Western banking system, they can't. So, again, that's going to be another. I mean, if December rolls around and they don't do a rate hike, that's the last straw, guys. Then, I mean, there'll be an effect on gold there, too, certainly. And, of course, we're forecasting Trump to mention the potential U.S. gold-backed dollar again, or at least pass the idea along. So that's certainly going to have an effect, guys. So all those upside catalysts that we've been talking about, especially if you read Wirehouse and you read Switch and Signal, okay, and you go, when the hell is all this stuff going to happen? It is happening, okay? And you have to really pay attention a lot of times to kind of see that, but on those metals ETFs, guys, for those of you that bought the dips, excellent, great. If you guys want to continue buying in at these levels, like I said, when gold's at 1450, I mean, and even 1500, possible real numbers near term, and I'm talking about the end of the year, guess what? These levels, like I said, if you bought in even at the very peak of the last one, we have a customer, he bought in at $28. He goes, man, did I screw up? No, you did. You did the right thing. You bought on the way down. Those are genius levels, guys, in another 2 months. Okay, and you can see it. It's not theory. You take a look at our trading record. You can take a look at any JNUG chart. You can kind of see the undulations in the pattern. So that being said, guys, as far as metals goes, it's looking better and better every day as we forecasted. So those that are interested in metals, here is what we are going to encourage you to do. Apart from taking long positions in metals, and by the way, you'll notice I haven't recommended a short position in metals yet. Days like today are why. Okay, you try short metals now. Okay, you go with one of those inverse, triple leverage bear metals ETFs. Okay, you will get crushed. Okay, I will not recommend something publicly that could potentially be a portfolio killer. I just won't do it. All right, I can't sit down with every single one of you guys individually and say, well, what's your risk, whatever the case may be. So there's a limit, and I won't go past it. All right, long on the metal side, yeah. Okay, we've established we have enough information where we can confidently say that. But to try to play both sides, it ain't going to work. All right, I mean, if you're an intraday trader and you want to play with that stuff, be my guest. But I'm not going to recommend it as a buy and hold because that's just freaking suicidal. But that being said, guys, again, a lot of the stuff, a lot of the narratives that we've talked about as far as, what you can do apart from holding those long ETF positions, okay? The other thing we're going to suggest you do is if you buy anything from Evolution Consulting, the Grant Street Note Metals Investing Guide is probably one of the best pieces that we've put together. And even when we read that now, we wrote it months and months and months ago, we read it now and we look at the price action on metals and stuff, even we go like, wow, and some of the ETF share prices that we recommended, I mean, just months ago in there, it's awe-inspiring to really kind of see that level of accuracy. So we're going to recommend that. And of course, guys, Switch and Signal. I mean, we've been really having a good time putting Switch and Signal together. People have been very happy with it. We've been getting compliments all over the place on Switch and Signal, the presentation style, and certainly the information therein. And we're excited about it. Wirehouse is going to get a complete revamp and a complete makeover January 1st. So call it the new series, if you will. All right, and of course, again, Switch and Signal, guys, we encourage you. I mean, we don't have to do this. We don't have to share this information publicly, okay? But we do. All right, and that is for the 10%ers out there, the ones that really and truly want to be successful, that I know I can work with and I can help, and and hearing some of their stories has been very inspiring, I should say. So that being said, guys, again, those metals ETFs, hold on, here we go. All right, as we forecasted. So that being said, guys, as always, email. Before I forget, info at, it's usually somewhere over there, info at evolutionconsulting.world, info at evolutionconsulting.world. Okay, bitches, gripes, moans, complaints, comments, feedback, attaboys, way to goes. Okay, you can save the bitches, gripes, and moans and complaints because, as you know, we do give exactly the square root of jack shit about those. But once again, of course, we do welcome constructive feedback, constructive criticism, ideas, things of that nature. Info at evolutionconsulting.world. And if you want to follow us on Twitter, it should also be over there somewhere. It is at Evo_consultants, at Evo_consultants. Okay, we've been in a mood on Twitter recently, so we've been having fun, and we really enjoy that. We get a lot of encouragement on there, and we're looking forward to doing live radio interviews and possibly television. Rumor has it again soon. So we're getting very excited, guys. We're having fun doing this. Certainly as we move forward now with the build, the Evolution Ultra, and stuff like that. We're very excited. We're happy to be able to share this stuff. So, guys, as always, be good. Everything really is a transaction.